Good morning, folks. My name is Curtis Chandler, President of PFL. We hope that you are enjoying our early morning briefing. We are live 7 a.m. Eastern every Monday. If you are viewing this podcast through our reports and are up at 7 a.m. on Mondays, please tune in next week live instead. Please hit the like button, follow us, and share the good word. We would certainly appreciate it. Tomorrow, we will be announcing a new giveaway for following and liking us on LinkedIn and hopefully driving us to over 1,500 followers in Q1, as we currently have 1,081 followers. Stay tuned to PFL for the latest and greatest. Our quote of the week is from Colin Powell. As most of you know, Colin Powell is an American politician, diplomat, and retired four-star general who served as the 65th United States Secretary of State from 2001 to 2005. A member of the Republican Party, Powell was the first African-American Secretary of State. Colin Powell once said, "There are no secrets to success. It is the result of preparation, hard work, and learning from failure." It goes without saying, but we really like this one, folks. It is the American dream all summed up. If we prepare, work hard through execution, and of course learn from the mistakes that we have made along the way, we will more than likely be successful. New U.S. jobless claims fell for a third straight week but remained near 800,000 as many businesses struggle under renewed curbs following a COVID resurgence and lockdowns in certain parts of the country. The Department of Labor tallied a seasonally adjusted 787,000 initial applicants for unemployment benefits in the 7 days that ended on January 2nd, compared with 790,000 during the week that included Christmas. The latest figure came in below economics forecast for 815,000 new claims. Continuing claims fell for a fourth straight week. There were 5.1 million Americans actively collecting state jobless aid by December 26, down from 5.2 million the week prior. Pandemic Unemployment Assistance is a federal program that provides benefits to the self-employed and others who would not qualify for regular benefits. Took in 161,460 new claims last week on an unadjusted basis. That was down from 310,462 a week prior. The Dow closed higher on Friday of last week, up 56.84 points, closing out the week at 31,097.97 points, up 491.49 points week over week. The S&P 500 closed higher on Friday of last week, up 20.09 points, closing out the week at 3,824.68 points, up 68.61 points week over week. The Nasdaq Composite closed higher as well on Friday of last week, up 134.5 points, closing out the week at 13,201.98 points, up 313.7 points week over week. In overnight trading, Dow futures traded lower and are expected to open down this morning 203 points. In an OPEC meeting last Tuesday, the Saudis presented an oil cut of its own production by 1 million barrels a day. Saudi Arabia presented its voluntary cut, which will see the country's January target of 9.1 million barrels per day shrink to 8.1 million barrels per day, as a preemptive action to guard against any dip in demand. As a result, oil rallied and had a great week last week. WTI Crude oil for February delivery rose $1.90 to $52.73 a barrel on Friday of last week, up $4.21 per barrel week over week. Brent crude oil for March delivery rose $1.61 per barrel to $55.99 a barrel, up $4.19 per barrel week over week. U.S. commercial crude inventories decreased by 8 million barrels from the previous week at 485 million barrels. U.S. crude inventories are 9% above the 5-year average for this time of year. Total motor gasoline inventories increased by 4.5 million barrels last week and are at the 5-year average for this time of year. Finished gasoline inventories decreased while blending component inventories increased last week. Distillate fuel inventories increased by 6.4 million barrels last week and are 4% above the 5-year average for this time of year. Propane and propylene inventories decreased by 2.4 million barrels last week and are 6% below the 5-year average for this time of year. Total commercial petroleum inventories increased by 1.7 million barrels last week. U.S. crude oil imports averaged 5.4 million barrels per day last week, up by 43,000 barrels per day from the previous week. Over the past 4 weeks, crude oil imports averaged 5.4 million barrels per day, 18.1% less than the same 4-week period last year. Total motor gasoline imports, including both finished gasoline and gasoline blending components, last week averaged 445,000 barrels per day, and distillate fuel imports averaged 302,000 barrels per day. Oil is lower in overnight trading, and WTI is poised to open at $51.75, down 49 cents per barrel from Friday's close. Total North American rail volumes were up 1.3% year over year in week 53, resulting in fourth quarter volumes that finished up 3% and 2020 volumes that finished down 6.7%. 7 of AAR's 11 major traffic categories posted year-over-year increases, with the largest increases coming from intermodal at plus 8.1% and grain at plus 30.8%. The largest decreases came from coal at minus 20% and non-metallic minerals at minus 11.6%. North American rig count is up by 67 rigs week over week. The U.S. gained 9 rigs week over week, and the U.S. currently has 360 active rigs. Canada's rig count was up by 58 rigs week over week, and Canada's overall rig count jumped to 117 active rigs. Year over year, we are down 507 rigs collectively. A few things that we're keeping our eye on, folks. Well, we're watching some key economic indicators, and it's not looking great. GDP, U.S. GDP fell at an annualized rate of 30.4% in Q2 2020 and rose 33.4% in Q3 of 2020. We are now in Q1 of 2021, but it's still not clear how the economy did in Q4 of 2020. The consensus of December 2020 survey of economists by Wall Street Journal says plus 4.1%. U.S. unemployment, folks, well, we actually lost jobs in December of 2020. A preliminary 140,000 net jobs were lost in December 2020 from November of 2020. Consumer confidence is down again. And given the events of last week, we expect to see lower numbers next month. The Conference Board Index of Consumers' Confidence fell to 88.6 in December, down from 92.9 in November. Consumer spending, folks. Total U.S. consumer spending fell a preliminary 0.4% in November. Read today's Rail Report for more details as it pertains to the country's economic indicators. We're watching crude by rail out of Canada. It looks as though crude by rail out of Canada is set to rebound in 2021. There is a tight, heavy market out there right now. The Chinese and the U.S. are wanting more heavy for their refineries. Inventories are increasing in Alberta, and pipeline congestion is evident as detailed in previous reports. Although more pipeline space is coming, it's not coming soon enough, and the basis is widening, with WCS closing at minus $14.95 against WT on Friday. We expect basis to continue to widen as more production comes online and a possible resurgence for crude by rail, especially for the producers of Alberta, given the current high price environment, who have sunk costs on railcar leases, loading and transportation, and take-or-pay agreements on CP and CN. Enbridge Line 3 pipeline, 760,000 barrel a day, is expected to come online in the fourth quarter of 21, and TC Energy's Keystone XL's 830,000 barrel a day pipeline is expected to come on in 2023. Petroleum by rail. The 4-week rolling average of petroleum car rails carried on 6 of North America's largest railroads fell to 25,641 from 26,020 week over week. Canadian volumes were down. CP shipments were down 13.4%, and CN shipments were down 2.9%. U.S. railroad operators were mostly higher. UP had the largest percentage increase, up by 13.8%. Railcars in storage. Well, they continue to decline. CPFL Railcar Storage Report issued today and contains the latest data. And last but not least, the vortex is back, folks. The initial cold push is expected to begin this week. By January 15th, expect to see temperatures 15 to 20 degrees below normal. Well, that's all for this week's podcast, folks. We hope you have a great, safe week, and we will see you next Monday. PFL has been extremely active in storage and all rail-related activities. Make sure to check out our just posted reports at pflpetroleum.com. And obviously, if you have any questions, comments, and want to troubleshoot, please give us a call at 239-390-2000.